Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Over the past 5 trading days, the bulls have actually taken control of the gold market, pushing prices to new all-time highs. The 3 main factors driving this surge are geopolitical conflict-induced safe haven demand, increased central bank purchases led by the PBOC, and also, the growing expectations for Fed rate cuts. Traders are also eagerly awaiting next Friday's US PCE data release, which could provide important guidance for their gold trades. So looking back at gold against US dollars' recent performance, despite a few minor pullbacks, the bullish momentum remains quite strong. And after holding steady above $23.50, buyers pushed the price above $2,400 last Friday, ending the week with a 1.6% daily gain. Then on Monday, gold saw an explosive intraday rally, breaking the April 12 high of $24.31 and reaching a record level of $24.50. Over the past 2 days, there has been, some hesitation between the bulls and bears, with the price currently trading just above $24.20. Key levels to watch on the upside are the $24.31 and $24.50, while if the bears enter the market, the local high from late April at around $23.53 might attract some traders looking to buy the dip. So overall, the bullish narrative for gold remains strong. The sudden escalation of, Middle Eastern geopolitical tensions following reports of the Iranian president's plane crash, combined with the ongoing conflict between Russia and Ukraine, have significantly boosted safe haven demand, supporting higher gold prices. Well, another critical factor supporting gold prices is the substantial gold purchases by central banks led by the PBOC. In April, the Chinese central bank increased its gold reserves by 60,000 ounces, marking the 18th consecutive month of purchases. And additionally, last Friday's announcement of measures to stabilize China's property sector is likely to sustain the purchasing power as well. And of course, Fed rate cut expectations also influence gold prices to some extent. Although recent Fed comments haven't introduced anything new, we're still seeing the effects of April's cooling US CPI data, which spurred dovish rate cut pricing. The base case remains that a rate hike is highly unlikely, but rate cuts still require more confidence in inflation getting back to that 2% target. While this environment is quite favorable for gold, the recent weak correlation between gold prices and Fed rate pricing, and the fact that gold has already somehow priced in a significant amount of rate expectations since late last year, means we rely more on geopolitical factors and central bank gold purchases to guide our trading. So in summary, the bulls have been driving gold trading recently, but the market is awaiting new catalysts. The FOMC minutes today and speeches by several Fed officials this week are closely monitored, but I assume they're unlikely to deviate much from what we've discussed as the base case. So their impact on gold prices should also be relatively limited. However, next Friday's April US PCE inflation data is more important. The market consensus is for the core PCE to increase by 0.3% month-on-month. If it rounds down to, say, 0.2%, a 25 basis point rate cut in September could be, fully priced in, reducing the opportunity cost of holding gold and pushing prices higher. So that's pretty much for this week. If you have any thoughts on US PCE data or gold trading in general, feel free to leave a comment below and let's discuss. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!